Hey guys, welcome back to the channel. This is Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, we're looking at Paramount Global. This is the streaming app on everyone's TVs that nobody has a subscription to, except for your relatives. My mom has a subscription. I've never been on the app. I'm just kidding. I'm not sure how popular this is in people who streams groups. So I'm sorry if I offended you, but they're having their earnings today, and I wanted to get ahead of it, and I wanted to share my thoughts on the stock and if the stock deserves to be at $11, if it should be higher or lower. We'll look at financial data points to come to those conclusions. We'll also see what institutions and hedge funds are doing. Are they buying? Are they selling? That's also a big determining factor. So without further ado, let's go ahead and just jump on in. The daily chart looks obviously pretty explainable, just down. It looks like a double bottom on the monthly. You can see right here, it went down to $10.10. Over here, the lows were $10.60, $10.99. It looks like a somewhat clear double bottom in my opinion. Let's look at the other factors. Relative strength indicates that this thing is just probably going to go down, but honestly, it's been flat for a couple years. It looks like it's been pretty flat. The momentum, honestly, it looks confused. Look how flat it is right there. It looks like it needs a blockbuster earnings report. You see what I did there? Blockbuster. It needs a boom. Like, this thing is flat. It's basically saying, okay, is there going to be any action? Because it's basically laying flat and trying to decide if it's going to be a big sell-off or a big run-up. Money flow also pretty flat. It's been it dipped and come back. It's been kind of flat. Relative momentum is just scraping the bottom of the road, like, you know, those Woody and Buzz Lightyear things that they have hanging off car handles. Just been scraping the road. It's all dirty. I just spit a little bit. Just mucking up, just scraping the bottom. People on the car behind them are like, wow, why do they do that? So this relative momentum looks pretty dead right now. Again, some type of earnings beat would be pretty fantastic. Looking at the shares outstanding, this is not ideal. You can see that they are adding shares to the pool, which are diluting the shares already out there. Although it's not an aggressive dilution, they are still adding shares to the pool. Sales, this is decent. It's kind of like a little U up. 2 a.m. are you up? And EPS is kind of mixed. Like, it was really good, kind of okay, really good, not good. So EPS has been all over the place. What we're going to do now is look at the market. We're going to look at a few different factors here to come to the stock price. I just wanted to have a fresh calculator. All right. So I've given a few different explanations on my calculation that I do, but basically in the last 4 of the 6 videos, go watch one. I'm going to make you watch one. Go and see why and how I came to doing this. So they have a $7.3 billion market cap. That's good. They're also losing $1.158 billion, which is not good. They are not profitable, but they make $30.140 billion, which is awesome. All right. Now we're going to go down to the cash and debt system. Let's look at the most recent numbers. So they have 1 billion. Did I add anything to that? What happened? Did I just do something? We're gonna grab this. Okay, this plus 1.804 billion. Good for them. Total debt is going to come out to total debt minus 15.665 billion. Nuts. Okay. And we're going to go up and divide this by our shares float. And this should give us our ideal stock price. So divided by 576 million, 530,000. $38 stock price. That's awesome. That's more on the aggressive end. If you were to take that number divided by 609 million, you might have a little bit more conservative number. I'm going to leave it at 38. I think that's just fine in my opinion. So I think if we get a blockbuster, holy cow, Paramount is a solidified streaming giant up against the likes of Netflix, HBO, Hulu, I don't know, Disney, I don't know. It's one of those big behemoths. I mean, that's what it needs. It needs a kick in the butt. So what are big money institutions, hedge funds doing? I'm going to go ahead and tell you right now. So FinViz traditionally has older data for institutional ownership. So institutions own 73%. That's older. And I say that's older because the website I'm about to show you, fintel.io, it shows you up to the day ownership of hedge funds and institutions. So if hedge funds and institutions wanted to dump all their shares on Friday, February 23rd, we would see that. If they wanted to add $1 billion worth, we would also see that. So that it just processes the ownership filings daily. For FinViz, I don't know how often it updates. So drum roll, institutions, hedge funds own 78.87%, a clear 4%, 5%? A clear 5% increase there. Not bad. And we can see here, hasn't been around too long, Paramount Global, although the chart suggests otherwise. That might be because of their merger with Viacom. I don't know, just, but not bad. It looks like Vanguard and BlackRock own everything. They own 58 million shares. Vanguard, BlackRock owns 46 million. And State Street Corp owns 33 million. All three of them have added to their positions. Going down here, we can see people are short. An ETF is short. Another ETF is short. This is a fund is short. Just going on down the list. Marshall Wallace purchased 4.8 million shares on Valentine's Day. What a cute little gift to somebody. $72 million just dropped. Crazy. So that is Paramount. I think if the stock does a U-turn, I think we've double bottomed on the monthly. I think an $11 stock price is reasonable. Going down and looking at their debt, I do just want to see how fiscally responsible they are. Debt. Total assets is $58.3 billion. Total liabilities is $35.3 billion. That is a good buffer. That's about a $30 billion buffer. Maybe $23 billion buffer. That's pretty good. Good for a rainy day there. When liabilities overtake assets, that's when words of bankruptcy start to sprinkle. Total debt right here, they're at 15.8 billion, but they have been as high as 19.7 billion, 19.1 billion. So I think they are being a little bit more strategic, a little bit more disciplined with their debt. So good for them. I think that's really good. Yeah, I would buy this before earnings with the hopes that it would go up. I like the risk reward. One share costs $11. My Robinhood account challenge is $25 every Monday. So maybe I'll buy a share to just ride it out. That's what I'll do. I'm gonna buy a share on a Monday. I mean, you're watching this on Wednesday, so it's obviously a little too late. But anyway, if you guys like this content, please consider subscribing. Leave a comment. Am I being too crazy? Let me know. Leave a like. Talk to you soon.